Hello, I hope you're doing fine. I hope you're doing wonderful. I hope you're disco. And this is both a market brief and gold brief via GDX. And I'm extremely bearish on everything. All right. This is the VIX in a daily time frame, and we can see the value of the VIX found buyers at the bullish crossover between the 50 and 200-day moving average. It is exactly there. Okay? So usually because this is a long-term golden cross, this will establish the new trend, and usually before it takes off, you have to shake down, shake out for breakout, as they say, shake out for breakout. Now we go into the fireworks will start next week. Capiche? Good deal. So this is the VIX and the bullish crossover. So what's so cold? The golden cross is going to take place next week, and the VIX will explode to the upside. Good deal. All right. This is two charts in one. The VIX in the daily time frame. Also, the equity protocol in the daily time frame beneath that. And every time the equity protocol spikes and have a value over 1, the first spike is the start of the new trend. And that happened last November. Last October 2022. And we know what happened after that. And the Tesla went down 50% at that time till it bottomed late 2022 to 2023. And after that, the market took off to the upside. And that was the last spike. It was in March. Okay, good. So that's the first spike. After that, in August 2023. And we know what happened after that until the market bottomed in 2023, until we had the last spike early this year. And now we have the first spike in equity protocol, and we will have volatility after that. This pattern repeated itself 100% of the time in the past. So this is the VIX above the equity protocol, and always the first one above 1 is the new trend, and it's not the last one. Good deal. This is the daily time frame for the Dow Industrial, and we can see, and I posted this in Twitter, and I really knew that the institutional fund managers cannot bring this bad boy above this value, for it is an extreme resistance based on the volume by price, and also based on the 38% Fibonacci retracement from this high March to this low. And now we sold off. Today we tried to test the exponential 20 exponential moving average, and definitely it found sellers. And it's always bearish whenever you have sellers at the 38% Fibonacci retracement. And next week we will break this low. Beautiful deal. All right. So this is the bearish crossover between the 10 and 20 exponential moving averages for the Dow Industrial. And we did have sellers at that zone, and now the seller's zone is still intact, and this thing might go down more. 10 and 20 bearish crossover, exponential moving averages. Good deal. This is the weekly time frame for the Dow Industrial, and we do have a bear flag formation. Good deal. All right, see that? Most likely next week this bad boy will break, and we have Bearish disco combo everywhere in the weekly time frame for the Dow Industrial. All right, this is the Dow Industrial's MACD in the weekly time frame, and I talked about this sell signal and everything. It is bad. It was bad for the market, good for the dollar, good for the USD JPY, and we have like a 10-year high now in the USD JPY, and also the 30-year yield. Good deal. So this thing is definitely bad for the market and good for the currencies, the USD, and bad for even gold. All right. Good deal. This is two charts in one. We have the VIX 50 and 200-day moving averages, 50 in the red, 200 in the green, and every time we have this bullish crossover that will take place next week, the Dow sells off 100% of the time. And if it has a bearish crossover, it's good for the Dow. Okay, good deal. 100% of the time. So it's definitely a real concern. So the VIX above the Dow, the golden cross, will affect everything. All right, this is the Dow theory, the concept of non-confirmation. This is the weekly time frame for the Dow transport and its MACD, and we have a bearish MACD and also a bearish action in the Dow transports. Same thing with the bearish negative divergence between the Dow Industrial and the Dow transports, and this will result in a real meltdown coming soon in May. Good deal. All right, this is the USD DXY, and we just broke out of this beautiful bull flag, and this bad boy will continue going up by next week, and liquidation mode will take place everywhere in gold, in the market, everything. All right, so if you understand technical analysis, you know why I am extremely bearish on everything right now. All right, this is the UEP, the ETF for gold, for dollar bull, and this is the weekly time frame, and everything is intact except with this two indecisive candles. But these indecisive candles needs confirmation, and we might have another takeoff, and we will have another takeoff. Good deal. So let's talk about gold. Before we start talking about gold, we look at that 30-year yield, and it's definitely in bullish mode. Everything breakout mode, bullish disco combo. So why gold is going up? Because it's the last hurrah, the last leg for the speculators. And usually this is the time where everything throws the towel, and the 30-year yield definitely in the breakout mode and definitely very bullish. This is GDX. Just purely analyzing GDX, there's nothing, absolutely nothing bullish about this picture, except when I don't want to talk about negatively of people that are holding GDX right now on the long side. Oh God, hopefully they'll learn from their mistakes. All right, so this is bearish engulfing that took place April 12th with extremely high volume, and this is a blow off top and a blow off volume that took place that day. It's definitely after that we are definitely 100% in distribution mode. That's how they do the stuff. If you were buying dust here, you should have sold it, because we have an inverted hammer next to a hammer, and the day after that you have a bullish engulfing. So if you are a real trader, you would have sold dust at that time, because this is really bullish action. You want to get out of the way, and also you could let's go back to the distribution. Okay, So distribution, you can see red days, high bars, and the rest are small bars, except this one when you have Newmont's explosive earning. And this is really not cumulative volume. This is just a reaction after an amazing earning report. Okay, so the rest of the beside that, definitely you have distribution volume, and usually Newmont earnings does not change the trend. Remember, let's talk about. Okay, let me put Newmont. You know what? I'm not going to put it. But 2021, you have a bad earning on October 2021, and after that, it took off and made really beautiful bull run. So the bad earning did not affect Newmont. Newmont had an ugly earning in September 2022, and after that, it went up after that, and after that, you had a bad earning just before 2023, and you made a new low, and after that, you took off. So usually, Newmont's earning report does not establish new trends. That's for sure, and I'm 100% sure about that. So this is a blip in the chart. Good deal. So let's talk about GLD/GDX ratio. So now it is not a good time to buy dust because you have a bearish MACD. This is GLD/GDX ratio. When you have a bearish MACD, get out of the way. And when you have a bullish MACD, buy dust. Usually this is always one of my rules. Bullish MACD, buy dust, and what happens, and so on and so forth. Sometimes it works, sometimes it doesn't, but most of the time it does. If you combine this with the chart, it makes a lot of sense. Good deal. It's one of my rules. I must have a bearish MACD in order for me to buy GDX, a bearish GLD/GDX MACD. Okay, good deal. So let's talk about the ratio itself and analyze the ratio itself. So this is GLD/GDX ratio, the price action, and its indicator. And we see a bullish wedge formation here. And all we need now is a bullish MACD to have a buy signal on dust. Everything is lining up. So you have bullish formation, lower low in the price action, higher low in the histogram of the MACD, higher low in the stochastic, higher low in the RSI. All we need is this bad boy to have a bullish mode, and that will be that. And now this happened. Last time it happened was in December 2023, and GDX sold off after this formation took place. And before that, it was May 2023, and we had this lower low, higher low, higher low, higher low, bullish divergence, and also double bottom right here. Capiche? So that is that. So I'm waiting for this bad boy to go, to be in bullish mode, and after that, I will buy dust. All right. Please like, share, subscribe, and do remember, Disco is forever.